Confused by Bitcoin charts? In just a few minutes, you'll understand how professional traders use EMA, RSI, and heat maps to read the market like a pro even if you're a complete beginner. In this video, we see how to use 3 fundamental tools to analyze Bitcoin, EMA, RSI, and heat map. None of these indicators can predict the future, but together they can help us understand market trends, momentum, and areas of interest. Let's start with EMAs, or Exponential Moving Averages. EMAs give more weight to recent prices and are mainly used to identify the direction of the trend. For example, EMA 20 short-term trend, EMA 50 intermediate-term trend, EMA 200 long-term trend. How to interpret them? Bullish signal. Price is above the EMA 20 and EMA 50. EMA 20 is above EMA 50. Both are above the EMA 200. This indicates a strong market structure. Bearish signal. Price is below the EMAs. EMA 20 is below EMA 50. EMA 50 is below EMA 200. This indicates market weakness. Practical example. When Bitcoin pulls back toward the EMA 20 during an uptrend, that area can often act as dynamic support. Now let's move on to RSI, one of the most widely used oscillators. The RSI measures the strength of price movements and oscillates between 0 and 100. Key levels: above 70 overbought, below 30 oversold, around 50 neutral zone. How to use it? Many beginners think that an RSI above 70 automatically means it's time to sell. In reality, in a strong bull market, the RSI can stay above 70 for a long time. In a strong bear market, it can remain below 30 for several days. Divergences. Divergences are particularly useful. Bullish divergence. Price makes a lower low. RSI makes a higher low. This may signal a potential reversal. Bearish divergence. Price makes a higher high. RSI makes a lower high. This suggests a possible loss of momentum in the trend. The heat map is probably one of the most interesting tools. The heat map shows where large concentrations of orders are placed in the order book. How to read it? More intense colors. Higher liquidity, larger concentration of orders. Weaker colors, lower liquidity. What it represents: below the price potential support zones, above the price potential resistance zones. Important note: the heat map. Important note: the heat map does not necessarily show where price will go. Orders can be filled, be moved, be cancelled. For this reason, it should always be used together with EMA and RSI. Combined strategy. Now let's see how to combine the 3 tools. Bullish ideal scenario: the price above EMA 20 and EMA 50. The RSI above 50 but not overly extended. The heat map showing strong liquidity below the price. In this case we have favorable trend, positive momentum, liquidity support. Bearish scenario: price below the EMAs, RSI below 50. Strong liquidity above the price. This suggests a weaker market structure. EMA and RSI are universal indicators available on almost every trading platform. The heat map, on the other hand, depends on the available data and may represent order book liquidity, liquidations, or trading volume, depending on the tool being used.